Hello traders, Gary Wagner here. It is 11:57 in Honolulu, 5:57 in New York on Monday, last day of October 31st, 2022, and this is the daily report for gold and silver. Traders, what a strong and disheartening way to end the month of October, and it has nothing to do with Halloween. Gold futures continued to track lower, down today by $8.40, or about 0.5%, with the most active December contract currently fixed at $1,636.40. There was actually mild buying in gold today, because although gold was down 0.5%, the dollar index was up 0.75%. And what that means is the differential between a 0.5% decline and a 0.75% gain in the dollar. That last 0.25% is due to market participants bidding gold prices higher. Silver was also lower on the day. It was down by roughly 3 cents, and the most active December silver contract is currently fixed at $19.12. This first chart is what was reported by almost all of the major news services, because with the last day of October comes the grim fact that we have seen the longest monthly decline since 1968. 7 consecutive months in which gold has lost value. Since the data service that I use only goes back on historical charts to 1975, I cannot actually illustrate that for you. What I can discuss, though, is the dramatic impact that dollar strength has had on gold. We are looking at a line chart with gold drawn in a goldish color and the dollar drawn in green. To give this chart a more dramatic impact, I've based the line chart on the high of the day, and they are based upon daily charts. It begins really in 2022 in January, and at that point, we had the dollar index pegged below 96 at about 95. You can see the scale of the dollar index on the left-hand side, and the scale or ledger of the gold market on the right-hand side. So we went from 96 and then peaked at about 114 at the end of September. And you can easily see that by these two lines I've drawn, one horizontal and one vertical, right during that time period. What that means is that during this year, up until September, from 95 to 114, we have seen the dollar grow in value by 19%. At the same time, we saw gold peak in March at 2,078. However, since that point in time, it has been on a dramatic and defined downtrend, trading to a low here of $1,636. It has already hit $1,622 on 2 occasions. You don't see that on this chart because it is based upon only the high price. We're looking at a daily candlestick chart of gold, and we can clearly see a pattern that has been throughout March till present, and that is once we saw gold trade to its record high this year, it had a series of lower highs, resulting in gold trading from a high of 2,078 to these recent lows at 1621. Currently, we are at 1636. Not only have we seen a consistent series of lower highs, resulting in 5 consecutive lower highs in a row, but we have also seen lower lows beginning in March after trading to a record high of 2,078. Our first low came right here. We then had a second low in the middle of May. We had another one in July, and then that was followed by this double bottom, or a set of equal lows, that came in from September through October. Although it is widely believed that a rate hike of 75 basis points to be announced on Wednesday has already been factored into the market. That is yet to be seen. What we can say is that 1621 is pretty much our current level, our first level of support. If it holds there, fine. If not, we'd have to look at the century mark, 1600. But more realistically, we need to look at different tops or bottoms. And to that degree, I've marked two areas. The first area is $1,566. It is simply based upon this top. Below that is $1,447, and that is based upon this bottom that occurs twice, first in 2019 and then in April, or just prior to April, in 2020. We certainly have to say that until the Federal Reserve begins to ease up on the magnitude of the rate hikes, we are likely to see the dollar get stronger and therefore pressure gold lower. It would take a lot of buying to move gold prices higher in light of dollar strength. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow, the first day of the November FOMC meeting. Have a great day. Bye-bye.